How you can remortgage effectively. I think the first example is an individual who owns his own property which he lives in. He then goes to work in Holland and decides to let the property. There's no mortgage on it. He decides to borrow against the property, and according to the example in the Revenue Manual, he can claim relief for the interest regardless of what he uses it for. I think in their example he actually uses the borrowings to buy a flat in Rotterdam, which obviously is nothing to do with his letting business. However, the Revenue's attitude to that seems to be changing now, and they're challenging the position if the borrowing is not being used for the buy-to-let business. So on to the interest restriction. As you all know, it came in from the 6th of April 2017, so we're now in the second year. That means that a high rate taxpayer who's paying interest on loans for their buy-to-let business will get higher rate relief this year on half of the interest, and the remaining half they will get a deduction at the basic rate. The following year those proportions will change to 25/75, and then after the 6th of April 2020 there will be no higher rate relief. Just a very quick example there, a rather extreme one, but there are cases like that. In this case we're very heavily geared. We've got interest of £100,000 that in 2015 we could have deducted against our rental profits, so we have a profit of £20,000. In 2021, no deduction for that interest at all. We just get our basic rate at 20%, and you can see that the liability's gone up by £22,000. And there are people who are in that situation. I have a client who is, and it's obviously changed the tax situation drastically. What can you do about it? Well, obviously incorporation is being talked about quite a bit, so you transfer your buy-to-let properties out of your own ownership into a limited company where you haven't got the same interest restriction. But there's a number of hurdles you've got to jump over in order to make that efficient. The first one is you're changing the ownership of the properties from yourself to a limited company under your control, so that's probably going to incur an SDLT liability on the value of the properties unless you can structure it in a way. There's one or two reliefs if the movement from own ownership to company is from a partnership. There is a relief there, but I suspect a lot of you're doing it in your own name, or if you're doing it on a husband and wife basis, it's never been set up as a formal partnership. So we've got the disposal for stamp duty land tax purposes, but we've also got a disposal for capital gains tax purposes. If we take Chris's example, the property bought 20 years ago for £100,000, it's probably back at £300,000 now in value. So if you move that into your limited company, you have made a capital gain of £200,000. You're clearly not receiving any cash from your company with which to fund the liability, so you've got to fund it somewhere else. There is a possibility that you can claim what's called incorporation relief, which means that basically you transfer all of the properties into the company in exchange for shares in the company. Now that will work if you can demonstrate that what you're doing with your properties is actually carrying on a business. So you're in full-time employment, you've got this as an investment or a pension fund for the future. That won't work because that is not your main occupation. If it is, and I think the Revenue have given some kind of guidance, 20 hours or more a week, then you may get that relief. We've then got the question, obviously the reason you're doing this is because you are losing a lot of tax relief on your borrowings. You've then got the question, can you move the borrowings into the limited company, and if so, will they attract the same interest rate? Corporate borrowing generally tends to be at a higher interest rate than personal. Some people are coming up with an idea where all you move is the beneficial ownership, so the loans stay with you. Again, that's still got the capital gains tax issues that go with it. And I think it's like most things on incorporation, whether it's a buy-to-let or it's somebody who's got a successful sole trader business. The consideration, you should never be doing this just for tax purposes. Does it fit in with your long-term plans? Chris highlighted earlier, you should have an end strategy. Some of you might be doing this for income in the longer term, in which case the company route is probably more attractive. And if you're looking to set up a buy-to-let business, the company is probably is a good starting point now. If you're looking to buy and sell, well, are you really gaining very much by putting it into a company? Because the company will incur a gain when it sells the properties in all probability. You've then got to get the money out of the company, and that's going to incur a second tax liability, as indeed you will if you extract the income by way of dividend or whatever. So I think the advice on this is get advice on it. Don't go in and think, yeah, this is the answer to all my prayers. Do the sums. Running a limited company will cost you more than operating in your own name. Yeah, it's a huge subject. That's a very brief canter through it, I think, but if there's any specific questions, I will try and answer them later. One or two miscellaneous points to finish with. As you may know, there's been talk that if you sell a residential property, you've got to pay the capital gains tax within 30 days. That's been deferred until at least the 6th of April 2020. Quick point, if you've got, perhaps you've got a second marriage, you're looking to switch properties around, get advice on it first, because if the property's been your own residence at some stage, by putting it in joint names perhaps to get a better deal on the income tax on rental, you may be messing up your principal private residence exemption. Very quickly on VAT, if you do a conversion, remember that if it's conversion from commercial to residential, the VAT rate should be 5%. There is the do-it-yourself house builder scheme as well, if you're building the house yourself. Finally, inheritance tax. Any way a residential property portfolio can be exempted from IHT? Probably not, because it's a business, it's not a trade. The only situation might be if you're perhaps a landowner and you've got a farmer, you've got some farm cottages which the workers used to occupy, you now no longer need them for that purpose, you let them out. If it's part of an overall activity involving the farming of the estate, then they may well qualify for business property relief, because the only test you've got to satisfy is that the activity of the business is mainly a trading company. I think I'm almost exactly on time, so I will stop. Thank you very much.